actually. The 80-20 rule is how am I going to implement that in who I'm going to be targeting in 2025. So once I started looking at my numbers for the last 2 years, which were somewhat devastating for me and like 90% of my clients, 2023 was a horrible year. 2024 was worse. And 2025 doesn't look that great. So my numbers reflected that. So I'm like, okay, so now where am I going to focus my efforts to generate more income? And when I did the 80-20 on my analysis, I was like, wait a minute. The majority of my big money comes from these two things. I need to focus more on that and less on this other stuff. And that's why when you heard my goals, I said tax work, tax resolution work, audit work, because there I charge by the hour. In most cases, I get paid a lot to represent someone, you know, to go from $500,000 to $28,000. I mean, it was a 1.5 year audit. So that's what makes me money. So then I need to start advertising and posting and doing whatever I can to try to generate income in that field, because I'm noticing that that's my moneymaker. Why am I going to focus on something? Like I had a client that focused on delivering like smoothies. And I'm like, why? How much are you making per smoothie? Is it really worth it? Do you know your value? I mean, most people don't even know how much their time is worth. And most people have not sat down and analyzed, what is my time worth? What is my hour worth? And I say, if you don't know your hour's worth, then you do jobs like cleaning your house when you shouldn't be cleaning your house. Why? Because you're worth more. Now, don't pay someone to clean your house and then be lazy and do nothing. Then that's counterproductive. But it's like, what is your hour worth? I don't do anything, nothing that is less than what I make an hour. But I'm sure that if I hire someone, I'm working. But that's how I start focusing on the 80-20, is like put my efforts where it counts. Depreciation or Section 179. You guys hear TikToks, oh, I got a Mercedes-Benz, whatever, and I depreciated it, and I buy this. And yes, people do that, which I think it's a dumb idea, but people do it. So when you have financial statements and a good accountant, and you buy equipment, say you buy laptops or you buy whatever in your office, you have to make a decision whether you depreciate it over a certain number of years or you write it off. Now, why? It all depends on your financials. For example, if you're having a great year, like a lot of real estate agents had an amazing 20, 21, 22. So guess what? All the stuff they bought, I expensed it all because we want to put a lot of expenses. And thank God that I did, because then 23, 24 came along and real estate professionals were hurting. So I wrote everything off using Section 179, meaning that if this was $3,000, I write off $3,000 and not put $1,000 over the next 3-4 years. That is the decisions that you make with your accountant at the end of the year, based on your financials, based on your net profit, to see how am I going to manage all these assets? What do I do with them? And that's why you hear people, like someone got a bonus of $500,000, or someone got the contract for $500,000, and I'm like, shoot, what am I going to do? Let's buy a brand new truck. Meet certain specifications, you write it off, and bring the income down. So there's a lot of stuff that you could do, but that's just some of the things that consider why having good financial statements. And then income and expense shifting. It's like if you're in cash basis and you're having a horrible year, well, let me pay that expense in January. Or you're having such a great year, it's like, I'm not going to invoice Sylvia. Let me invoice her in January so I could get paid in January, so I won't count it this year. That's called income and expense shifting. And usually do that in December. Why? Because that's when you could shift your income and your expenses to manipulate your financial statement to say, what do you want to show this year? And that's why having a good accountant, at the end of the year, you sit down and say, okay, what am I going to do? I have all these assets. What is your plan for these assets? And I'll show some strategies at the end of the year, what you can do and what you shouldn't do. But all right, so then, this thing not working. Okay, so now here we go to the boring side, the financial statements. I want to share mine. Now, obviously I shifted all the numbers. Please do not try to add those numbers, because they're probably not going to add up, because I faked all of them. So you're going to say, oh, this guy's a crappy, his numbers don't even add up. This is just for illustration purposes. My assistant just plugged in numbers to make it look real. So sorry if they don't add up or they seem weird. It's just, these are manipulated just for this presentation. So if you notice, this is my actual income statement. And if you notice, the income, most people have revenues, whatever, 300, 400,000, and then they have expenses and they break them down. I want to make sure where my money is coming from. So if you notice, for example, I break it down by all the different work that I do. For example, this thing has a pointer? Yeah. Okay, so for example, never mind, I'll point. So for example, these are like international clients, accounting department, admin, payroll, corporate. There's like different departments. But these fee codes means, are they a new client? Are they an existing client? So I need to know how many new clients are coming in. How many people are renewing their contracts with us? So I break down all my income sources from, current clients. This is just a workup, continuing express contracts. There should be something called new clients. So what we have is just, I want to make sure that for me to make better decisions and how to focus my energies and where I need to work, I need to find out how many new clients are we getting? How many are renewing? Do we have to work on improving our value for our clients to see, or do we not focus on a certain industry that we're putting so much effort but there's no growth? So most people just have one line item or two line items. I don't believe in that because you can't really make a lot of good decisions. I break down my income. Everything else is going to be easy, but my income is broken down into every single type of service that I do. Like my firm has a payroll department, tax resolution department, sales tax department, intake department, corporate tax department, business tax department, accounting. So we have different departments. So I break down my income based on different categories. For example, if you're a school, you might break it down by, what service. I don't know what services you offer. Is there after school programs? If there's not, do I need to expand it? Do I need to take it outside? Because whatever, is that worth it? And what the expenses are? So basically, by you breaking down the types of income that comes in, especially if someone said they have like 6 income sources, I think that's great. If you get one client and you can squeeze 5 or 6 services out of them, that's the best case scenario. You don't want to work 3 times harder to get 3 different clients. That makes no sense. Get one and do real estate, do gardening, do house cleaning. Imagine all the income that could come in from one client, have different sources. That's what I have. One client, different sources. That's why I don't work with W-2s. Because if Erica works at Walmart, what is she going to give me in terms of income? Tax prep. That's it. Why do you think only 1% of my clients are Erica that works at Walmart? I know you don't work at Walmart. I'm using that as an example. But that's why. There's only one income source. I don't want one income source. Let them go to H&R Block. I don't need them as a client because I can only get one income source. I want to make sure that they partake in every one of those income sources. So helps create revenue goals. So when you have a comparison, these are January's of 24, this is January of 23. Well, now I know what's going on. Hey, international, we didn't do this well. What happened? Why did we lose $2,000? Hey, but we did increase on accounting. Hey, that's actually good. We're increasing there. But, and we're increasing in everything else. But hey, I'm going to go talk to the international person. What's going on? Why do we drop? What are we not doing? Or is it that they're coming in February? Oh yeah, Tony, they're coming in February. So then guess what I'm going to do in February? Print that report and see if it's true. Because I want to make sure that my staff performs. Because if they can't execute, what I want them there for. So that's why no one can say, if you're working in my tax department and your job is to bring in clients and the intake was close to nothing, what are you doing? Can you look at, because numbers don't lie. I don't see the numbers. Can you tell me what's going on? Because I don't see the numbers. Are you making a mistake? Because every time you submit an invoice, they put a fee code. And the fee code's tied to the different income sources. So that's how I'm able to create goals, help evaluate sales performances. That's how I tell my team, hey, congratulations, high five. Hey, what's going on? In this case, I'll have a talk with my international department. Why was there such a big drop? And then determine the 80-20, where am I going to focus my efforts? Break expenses into categories, which we'll discuss that next. So then there's the same income. If you notice, now we have the tax department, the intake department. These are all the new, NC means new clients. And then we have your total income. Now, gross profit, see, this is a service company. Gross profit represents, it's a very important number. It's for people that actually manufacture or produce. They have raw materials, they have labor, they have different expenses. So their gross profit is going to be different. Here you have gross profit and total income the same because I don't have cost of goods sold. So this is going to look a little bit different than, for example, someone who's in real estate. You might have some cost of goods sold, but someone who's in cleaning may or may not. Some accountants don't put it as cost of goods sold. Some do. I usually put it on materials and supplies. They don't really sell stuff, so I always put it on materials and supplies. But someone who maybe bakes cakes or donuts, they'll definitely have a cost of goods sold. And then gross profit tells you, are you charging correctly? Because what happens is you might have a profit because you're really not advertising, you're doing all the work, you don't have staff, but your pricing is so bad that you're not making money, and you know by the gross profit. So that's why you have to discuss, and your accountant should say, hey, even though you made this money, but your gross profit is really low, that means that you're not charging enough for your product, or your costs are so expensive to manufacture that you have to reconsider that. And I've had a lot of restaurants where they had to reconsider it. And unfortunately, some restaurants, they don't have the best products, the best of everything, but sometimes they have to do that to get their gross profit. Now, this is the profit without any expenses. So that means that their pricing has to be priced right, because if not, you're dead. You will not have success in your business if you can't price. That's why I would say know what you're worth, because for the Latino community, many times we struggle to know what we're worth. And we question ourselves sometimes, am I really worth that much? I did. I used to charge $200 for a business tax returns when I started. I won't even talk to you for $200. But I know my worth. It took time. It took many years, but I finally know what I'm worth. So, but I had to figure out that way too, because I'm like, wait, I made $200. Wait, all that work for $200? I should just go work at McDonald's. It's probably now it's $20 an hour. It's a lot more profitable than $200. Okay, so then you have all the expenses. So I'm very detailed with my expenses. So this is my actual format for my expenses. So you have, I break down everything, because I sometimes see financial statements that have supplies, $34,000. And then sometimes you have, you have cost of labor. It's like, well, whose labor is it? I always remove the owners because I don't really count them in my analysis. But I'm very detailed with the expenses, like insurance. What type of insurance? Not just insurance expense. Not just banking fees, because banking fees could be your financial advisor, it could be merchant services, could be banking fees for not having sufficient funds. It could mean a lot of things. So the more detailed your financial statement the more financial statements are more detailed, the better decisions you make. And then you could take actions like, hey, how do I cut costs? Like, for example, I was sending prepaid envelopes to our clients, for our accounting clients. Means you got prepaid envelopes. That means that all you have to do is put your receipts in there, and then everything is paid for. But it was like, wait a minute, is that making sense? It's $1,000 for the permit, plus all the postage, and it takes like 2 weeks to get to our office. We're always late. And then it was costing me a lot of money. I'm like, nah, let's just start removing that. It wasn't worth it. How do I make that decision? Well, based on the financials. So how successful are you with running a business? Now, this is sort of hard, because if you do good tax planning, your net profit should be pretty small. So, but if you know that you have money set aside because of your tax strategies, a good way is to figure out, well, what's your profit margin? I always calculate my profit margin. It is very simple. You get the net income divided by total income, and that tells you your gross margin. What does your gross margin tell you? Say it's 30%. That means for every dollar that you earned, your hard work, you get 30 cents. That's what you keep. If your profit margin is like 8, 10%, then you have to start thinking, like, what's wrong? Because that means that I'm not keeping almost anything. So your profit margin standard, most of my businesses have like 15 to 30% profit margins. Tax accountants have like 18% profit margins. So the industry is between 5 and 10%. It depends on the industry. Some people that are heavy with labor, their profit margins are very small. especially at constructions, roofers and all that, man, it's just crazy. It's just not only they have to work about workers' comp and all these insurances, and they have to worry about payroll taxes. It could eat up your profit big time. So that's why people that are in business, they don't want to take employees. They don't want employees. But then here's the drawback. You can't grow. There's only so much you could do. You need to know how to plug in staff to be able to take over some of your responsibilities, because your responsibility as a business owner will be to be the rainmaker. That's the E-myth. And that's what Carla focused on. What else? The E-myth, and what else did you say? Okay, the E-myth, which I'm sure you guys have read it. I read like several books of them, and it tells you don't work in the business, work on your business. So anyways, so this is a good indicator of how well you're doing, and just a profit margin. I could go over a bunch of ratios, but you guys will be bored to death, so I don't even want to go over that. So we'll go over, this is what I normally see from accountants. This is what I normally see. You had a question, someone?
No, I do, I'm sorry. It's because I'm not sure if is that what I heard? You said that you remove from the profit and loss, like your own pay or your own pay?
No, I'm just, no. That's just for something that's just for something else. No, for the profit margin, yes, you have to add it in there because you're an expense. Mm-hmm. So, however, if you're shifting a lot of money, like some of the strategies that I'm going to talk about, then you know that the profit margin might be low, but you're still getting a lot of money somewhere else. And I'll explain where that money is. Meaning that your still benefit is going from this pocket to this pocket. Yeah. So you don't really care that much that the profit margin is low, because you know you're already getting money somewhere else. I'll give you an example of what that means. I told you I bought the building. So guess what? It's under LLC. My One Tax Pro has a contract with the LLC, which is the building. I charge them, I think, like $175,000 or $180,000 of rent. So guess what? My profit margin got affected, but the money went from One Tax Pro to my LLC that houses that building. So I don't care. And guess how much taxes I paid on that $175,000? Zero. That's crazy. But so.
I'm asking because when I check my profit and loss, like most of my money goes for payroll, including myself. So I was like, well, there's nothing that I can do about it. Like I cannot deduct it.
You just have to make more money.
Yeah.
Or fire the staff. There's something you could do, or fire the staff. Because sometimes the more staff you have, the less productive they are. And you have to figure out how to create performance measures for them to try to motivate them or get rid of them. Because most employees, I was an employee, come on, if you guys have been employees, you know we're slackers. We're not going to give 100%. Yeah, in the meetings we're like, yes, boss, yes. And then besides, like, screw that. I don't have time. I'm not going to work overtime. So then you have to find out how your staff is performing. Why do you think my income is separated by categories? Because I had a talk with my tax department saying, hey, we're not getting a lot of intake clients, so what's going on? But without that, I would have been guessing. Because, wow, there's less money in the bank account. What does that mean? I don't know. There's just less clients. What department? I don't know. It must be that department. No, it must be that department. No, I'll tell you which one based on my financial statements. Did I answer your question?
Yes, thank
Okay.
you.
I got it.
Yes.
For the profit margin calculation, you're taking the net income, right, that's after expenses, dividing that by the total revenue?
Yes, total. Yeah. And then you could get an average, and that's good to know, because if you have all these goals and your profit margin isn't changing, then what are you doing? Something has to budge, because your goal is to be rich. That's the only reason why you're in business. You're not there to do charity work. You're there to get rich. How am I going to get rich? And if your goals are to increase revenues and to work hard and to work like me, crazy hours, and then at the end, you're just as broke, go to McDonald's. Quit. Because it's pointless. Paying the price is horrible for a business owner. I sacrifice a lot. Make it worth it. Don't just dream small, dream big. And trust me, at the end, if you believe it and you believe in yourself and you grow, meaning education-wise, your income will follow you. But anyways, that's another training. I'm an accountant, so let me go back to accounting. Veronica?
I wanted to let you know, Tony, that I encourage all of the cohort to bring their income statements so they will be able to figure out that percentage that you just discussed.
And if you have your financial statements and we have time, I'll be more than happy to review them. Actually, here's what I'll do. I'll even do this better. Because I got an unreasonable request by Carla Sandoval, who's full of these. Whenever she says, I have an unreasonable request, you're screwed. That's it. That's it. It's like, oh, shit, now what does she want? Yeah, that's it. So she said, because I'm helping this group and they're Latinos, so when she said Latino, she got my attention. She knows how to get me. And I said, can you please offer them a free consultation? I'm like, what? Do you know how much I charge for these consultations? I'm making an unreasonable. And then she follows, I'll pay dinner. So this dinner is for coming and for giving you guys a free consultation. And we shared a dinner. We got a place and every guy got it. I'm like, I ordered a tomahawk. I'm like, oh yeah. And then next thing you know, I turned around. Carla was chewing the bone and I mean, seriously, I should have taken a picture. Tomahawk was gone. The bottle of wine was gone. I'm like, and then no, but she said, and I'll pay dinner. I'm like, wait, where's dinner? If you would have gone, you would have probably got like the cheesecake that we got at the end.
That's funny.
But
I got a question.
yes.
You guys are welcome.
Okay, so before that, so what I'll do after tax season, which will be after May. I know this program ends when? August. Okay, so after May, unless you want to become a client, then you could contact me now. But if not, then please wait till May. And I'll have a consultation, like a 30-minute consultation to go over your financial statement, see what I would recommend. I could review your tax returns. It'll take me like, maybe an hour or two to find out like how everything looks. And then I'll be more than happy to help you guys out. But it would have to be after tax season. Unless you're like, I'm tired of my accountant, she doesn't know what he's doing. Can you please help me? Then call me and I'll help you. But if not, then just wait. And I'll be more than happy based on people's unreasonable requests to do a free consultation. And I promise I say yes, so I'll do it. I'm sorry, you had a question? Yes.
Yes. So one, do you meet up with your clients on if you see red flags, do you call them up and say, hey, we need to talk?
Immediately.
Yeah.
One of my jobs as an accountant, that's why I'm not your typical accountant. And if your accountant isn't doing this, then you need to switch. I'm not trying to promote myself because I told Carla I wouldn't, but I don't know why our Hispanic community hires incompetent accountants. And I've seen that all the time. So, knowing what your financials look like and what data you need to address that with your accountant. If your accountant does what this person does, this is another financial statement from most accountants that they look like that, then there's something wrong. So when I meet with my clients, it depends on how much you're going to pay me. If it's going to be a tax client, then I see you like everyone else once a year, and that's it. But when you have an accounting with us where we look at your reports and we look at your receipts, we do two types of accounting. The most popular ones is the most expensive one we offer, is where we match receipts with the actual transaction. That's the best accounting. The lazy accounting, which I have probably 30%, is like, oh no, we don't need your bank statements. We don't need your receipts. All we need is your bank statements. That's the lazy accountants. And let me tell you, those lazy accountants that do that work, and I'm one of them, because they ask me to, because vienen tan mal acostumbrados from bad accountants, I just want to do that, and I don't want to do more work. I'm like, okay, we have that option. I don't recommend it, but we have that option. Why don't I recommend it? Because you guys are very creative with expenses. Very creative with expenses. Oh, the Louis Vuitton bag. Oh, that's a gift for someone who's going to be a public speaker. Yeah, I'm like, not a problem. That $2,000 bag, you could deduct $25 per person per year as a tax deduction.
Are you trying to tell us that you want a Louis Vuitton suitcase or something?
Yeah, no. So when we see that, we immediately send an email, we make a call. You need to change this. Do not do this again. Or why don't you do this instead? Give it as a promotion, but give me a promotion flyer and actually give it away. But they should stop you and say, you cannot do that. And if you say, I don't care, do it anyways, I fire you on the spot. I will not do crooked stuff for anyone. I'm legal, legit, and I don't do crooked stuff at all. But I do it right to make sure, because my job is to protect you. To see, when I look at your financials, I see it as an accountant, I see it as an auditor, and I see it as a business owner. If the story doesn't make sense, I tell you something is wrong. And sure enough, the taquera was sending money into her other accounts because she had like $30,000 de carne and only like $5,000 of sales. Like, hey, come on, what happened to a carne? That makes no sense. So they're like, yeah, okay. Well, then put it back. Because if not, then I can't work with you. She did. And guess what? 2 years later, she gets audited by the sales tax. And she passed. If she would have got audited 3 years back, she would have been screwed. Because it was obvious. You can have $30,000 worth of carne and they only sell like $5,000 in that month. Makes no sense. But I knew because of the financial statements. So it is your accountant's responsibility to tell you what you're doing wrong and correct it. Okay, so this is like what basic, statements look like. So if yours look like this, then you probably have a basic accountant who.
So based on these statements, is there, like, let's say you're trying to get like a loan, or a bank's looking at your statements for loans, or let's say you're trying to sell your business, what would be the numbers or the areas of that they would maybe focus on, and why?
Okay, so the number is your net income. That's going to be important. And then they go the balance sheet. Because the net income just says what you did in that period of time. The balance sheet says, what is your business worth? They're not going to give you a $1 million loan if you see your balance sheet that your net worth on your corporation is like $20,000. It's like, come on, no one's going to take the risk. So they look at the net profit and then how many years you've been in business, but they also look at your balance sheet. So let's look at the balance sheet. So this is what a typical balance sheet looks like. It has assets, remember assets equals liabilities, owner's equity, But it tells you, hey, how much money do you have in the bank account? In this example, there was like $12,000 in the bank account. That's not good. That's not good at all, actually. And then you have all these other assets. Then you have, fixed equipment, $14,000. I mean, if it's an accounting firm, $14,000 is reasonable, but it's not. Like I have just the servers and the computers is a lot more than that. But this is just an example. There was $14,000 of fixed assets. Then you have something else like I'm a strong believer. There's another example of investing your corporate funds in an investment account. And I think, who was I talking to? I was talking to someone about loans. There you go. So that's where the corporation then, instead of having the checking account, it opens different investments accounts. And then that's where, if you want a loan, I was talking, and I'm sorry, your name, I forgot. Isaiah. So I was telling them, it's like, wait, I don't really need banks. Because I go to Morgan Stanley and I say, hey, based on my investments, how much could you loan me? And then I get the money. The stocks are never sold. There's no capital gains. I have access to capital, and it's my own, based on my own investments. So I haven't had, other than a business line of credit, which everyone should have, and I think you're going to see this, like a business line of credit. It's under liabilities. So obviously there's credit cards. I always have credit cards that give you rewards for travel and all that stuff. So I don't use regular credit cards, and I definitely never use debit cards.
So are the stocks then owned by the company?
By the corporation,
Okay.
yeah. So they're owned by, you can't just take the money and then transfer it to your personal account. You can't just do that. So then which ones are, talking about loans, they will look at current assets and, no, that's under liabilities, I'm sorry. So they'll look at your current assets, fixed assets, and loan to shareholders. When I see loan to shareholders, give me a minute. When I see loan to shareholders in a balance sheet, that means that you're loaning the corporation money. It's like, why? Why are they loaning you money? When I see it, like they loan you, the corporation loans you money. The only time I see that is when you overdraw your retained earnings. So if your accountant tells you you need to have a loan to your shareholders, that means that you owe money to a corporation. Usually means because you had a $10,000 profit, but then you took out $14,000. So then guess what? You need to pay some of that money back or pay dividends. So that's why when I see loan to shareholders, and if you see loan to shareholders, ask why. That's interesting. Why should I have a loan to shareholders? And I see that on a lot of financial statements, and that just tells me that you're taking more money than you should out of your corporation, which are the retained earnings, which we'll talk about that later.
But
Mhm.
when you create, do a check, I mean, let's say I have an S corporation, so I need money as a personal, as a personal, so I do a check, as a loan.
No. Raul could answer that question. You better answer this question. How do you take money if you're an S corp out of your corporation?
You do a owner's equity check.
Draw.
Yeah.
Okay. So when you have an S corporation, there's certain.
Noted.
When you have thank you so much. When you have an S corporation, you have to be careful how you manage the accounts.
Okay.
There's certain ways that you can take money out, which I'll discuss later, but one of them is just making yourself a check, owner's draw. You take it from your corporate payable to your name, and you deposit it in your personal account. That's one way. The second way is loans, which I don't like. Third way is the accountable reimbursement plan, which I'll talk about that as well. You take money out of your corporate and you put it into your personal account. So those are the ways that you can take money out.
But one is a loan and the other is a K1?
Okay, so I encourage my S corporations, unless they're in a growth stage, to take the money out but not liquidate your earnings. So your bank account, in this case, it doesn't look good for this person because all they have is $12 in the bank, $12,000 in the bank account. And if you look at all their expenses, their monthly expenses, are, let's just say they're $30,000, $40,000. They don't even have enough to cover payroll. But I wasn't as concerned. This is fake, obviously, but I wasn't as concerned because this person has a Morgan Stanley account. Where's the Morgan Stanley account? Here it is. So they have some money saved in their stocks. So in case of emergency, they could tap in that. Yes, they'll pay the capital gains, but who cares? But that's why you want to have a business line of credit, because you don't want to sell your stocks. You just want to get a transfer from the bank to your business, and then you could take it from your business and then take it out if you need it. But I don't recommend that ever. I'm just saying those are options. But when you take it out, a loan means that you got the money, but you're going to pay it back. Uh-huh. And if you need that, then you have to have minutes resolutions approving the loan. Then you have a repayment schedule with interest, and it's just a big old mess. You can't just get a loan. You have to have, if you're an S Corp or C Corp or an LLC acting like an S or a C Corp, you need to have minutes and resolutions approving that loan to a shareholder, and you have to have an agreement to repay that back with interest.
And if you're the only one shareholder?
It doesn't matter if you're 1 or 100.
Okay.
Yeah.
I got a two-part question. Is a shareholder distribution the same as an owner equity draw?
Yeah, same thing.
Okay.
Yeah.
The second part is on that Morgan Stanley account. If you're going to loan it to, let's say you're going to purchase a building or something, right? You're going to loan it to yourself on the personal account, or to yourself as a not personal entity, right? Is that like working capital, or how do you report that? Because you're going to have to pay that loan back to the... As
a shareholder liability. Now you owe so the company has an asset, which is loan to shareholder, which means we loan you the $200,000 that you get out. You need to pay it back.
And so for tax purposes, do I have to pay back an interest rate? Like the primary?
Yes.
Right, okay.
Yes.
And that's taxable?
Yes. Great questions. Great questions. Can I continue? Yes? Okay. So, obviously, here's the assets, and then we go to liability, which are the credit cards. And then we have short-term and long-term liabilities. So for loans, it's very important that you know how to categorize them. Because when they're short-term, they're going to expect you to pay those off. So that's why if you have an accountant, make sure that you have long-term liabilities, like business line of credits, or you bought vehicles, or you bought equipment, or whatever. You have it under the long term, because when you get funding, they will ding you if you put everything under current assets. They will ding you, so you have to be very careful with that.
Tony, I got a question. You bought yourself a property you bought a property, then you loan it out to your business.
I
You rent
leased
it out.
I leased it to my business.
I think as small business owners, I think we all kind of aspire to do that, right? To go out and make enough money to buy a property. But would you be able to tell us kind of like how you did it so that I can get a better understanding? Because I've heard of it done, I just don't understand the full concept. Do you take, let's just say you had $1 million in the bank, do you take a $500,000 distribution to yourself and then you go buy the building? Or how does,
Okay, so
what's my disconnect? I don't understand how that.
okay, so many years back, I had troubles with my rental agency, the landlord, and they were just a pain in the butt. I mean, they were just not good people. So it was a good thing that happened. So I decided, hey, what am I gonna do? Because I'm tired of rent. In my mind, I hate paying rent to people anyways. I'm trying to say, what can I do to save taxes and put money from here to here, and it's my own money. So I said, well, why don't I buy a building, commercial building? So what I did is, for a number of years, I had it in the corporation, but I started taking it out and I started investing it as a distribution. I didn't have it all there. I had maybe $200,000 was there, but the 300 and some thousand was in my personal investment account. So then when I had a good year, I would take, 50, 60, 100,000 and I would transfer it to my personal as a distribution. Why? Because the accounting, the balance sheet said that I had enough retained earnings. So you have to ask your accountant, how much can I take out? I mean, I'm the accountant, so I knew how much to take out. You can't just say, hey, let me just take it all out. So then I started taking money out, and I left some in the corporation just in case of emergency, and then I had a pretty large investment account for buying a building. So when the process came, I formed an LLC. I put the building in the LLC. I did a cost aggregation study on it to itemize it like crazy. And then I pulled $200,000 from my corporate account as a distribution. But by then, I had already accumulated a lot. So $200,000 wasn't even a loan. I took that out and I gave like $500 and some $1,000 as a down payment. It was just 20%. And then I ended up buying the building and everything was pretty good.
Okay, great.
I went to Bank of America and it was a pretty easy process.
Yeah, that was just the disconnect was, are you taking it as a distribution or was there another way that you navigate?
You take it as a distribution assuming that you have the retained earnings to be able to justify it. If not, you leave it there. And when your business grows, then you take it out.
Okay, got it.
Because I didn't want to make a $500 and some $1,000 distribution right off the bat.
Right, because it'd be big tax
Yeah,
implications.
yeah.
Okay, thank you.
See, so that was sort of answering your question from yesterday. Yeah.
And your LLC is under your corporation?
No,
Is it separate?
never, ever buy a car unless you're a mover, you're a truck driver. Never buy a house, never buy a building, never buy anything in the name of your S corporation. Unless you lease a car, that's fine. But don't buy a car for your personal use. Don't buy a house, don't buy a building. Don't ever buy anything. People make such mistakes with that stuff. It's horrible. Never, ever buy anything that's your S corporation. That's why I have different LLCs. I have different businesses. They're not all in my corporation. That's my main business. But I have different for, legal purposes, for asset protection purposes, for tax purposes. I have all kinds of entities. Never would I buy it under the name of the.
Totally separate.
Totally separate.
What could happen though if you did do that?
You get spanked by your accountant. you and Veronica's like, oh, I want to be spanked. Why are you raising your hand so quick? You don't do that because you don't want to have your main business have, okay, say for example, you put it under the name of the corporation. God forbid, I have my cousins who are, we all have people that do construction. They come and do something, burn, and someone died. Now, they're going to go after the building and my tax practice. Why? No. Keep it separated. And then tax planning, it makes no sense either. So, but for liability purposes, asset protection purposes, as part of my living trust, I have everything sort of separated, and it just makes more sense for me. You should all have living trust. By now, if you don't have a living trust, if you don't learn anything today, give back to the community and get yourself a living trust.
You said not to purchase even company cars under the S corp. You want to put that under?
I usually allow my clients to do that when they're like truck drivers, delivery people, transportation type services, construction, but not like a tax accountant. I'm not gonna real estate, maybe cleaning. If someone does cleaning, maybe you need truck for transporting your equipment or all the, you see the Mary Maids people, the little pink cars. You want to have a car that's being used by your team, then of course, that makes sense.
Okay.
But not like, houses and your personal cars and, a lot of people do that. Your rental properties, like, no, you don't want to do that.
I have a question. So I have 18 vehicles that the S corporation bought. But I have an LLC where I bought the building. I was thinking about opening another LLC and transfer all the equipment and the vehicles. What do you think?
That you need to talk to your living trust attorney because it depends. Like I have doctors that have all their super expensive equipment under an LLC that they lease it out to the S Corp, and then they have other LLCs, but it all depends on your living trust, not your accountant. I would talk to your living trust attorney, see how you could strategize to maximize not only when you die, what happens, but also asset protection as well. So yes, it makes sense if you have a lot of assets, have it like under another company, then lease it to your company for protection. It makes sense, but there's other stuff for protection. You can have a very high liability, errors and omissions, or whatever type of insurance you need. 2, 3, 4 million, that's gonna basically cover in case you get sued. They'll go after that pocket, not your pockets. Unless you have a business that's very high risk of being sued, then that's when you do, like doctors could get sued, so they have different assets. Truck drivers, God forbid they fall asleep or something happens, they'll lose a lot.
I'll just add, you could look at an umbrella policy.
I have an umbrella policy for several $1 million as well. So there's different, that's why if you're in business, you need to have a good lawyer, a good accountant, a good insurance person, and a good financial advisor. That should be your team. Even when you start off young, it doesn't matter. You want to have that protection. All right, so that's the balance sheet.
Sorry, really quick.
Oh, I'm sorry, yeah.
Why just leasing the car and not buying the car with your business, like under your business?
Because if it's your personal car, you could lease it. It's not your car. You're leasing it. You're deducting it on your corporation, but you don't own it. But if you buy it, it just becomes a company asset. Then you have to, when you sell it, you have to document your books. You have to depreciate it. Personal use, it just becomes a nightmare. It's just more of a headache. But if you use it for your business, then it makes sense. I'm talking about personal use vehicles.
So I just bought mine, that's fine. Yeah.
Well,
I bought it under the business.
On the business. Okay, so I tell my clients, if you're my client, before you make any decisions, you call me. That's what I'm here for. You always call me if you make any decisions, especially major decisions.
And I was leasing, and I, because of the miles that I drive, I bought it.
Exactly, and sometimes leasing doesn't make sense because you have like 10 to 15,000 miles and you have wear and tear and all that stuff. So sometimes leasing makes no sense, especially for people that do a lot of estimates and all that. They don't want to lease. It makes no sense. Yes.
Okay, I have a car. I bought a car, but I had to do payments on the car. So the corporation do not have enough credit, so I can get it under the corporation. I got it under my name, and I'm renting the car to the corporation. It's okay.
Then you do an accountable plan. The accountable plan will help you reimburse you for a business expense paid with personal funds. And I'll talk about an accountable plan later. Let's see here. This.
So I have one more question.
There, I put questions. Perfect timing. God.
This is on the leasing. Okay, so what if you lease a car under your business, and it's a three-year lease, and then at the end you can return it and then pay with the mileage and all that. But at the end, instead of returning it, you sell it, let's say on CarMax.
Well, first of all, you have to buy it. So you buy the car, right?
Well, to end the lease instead of like paying off.
So you end the lease.
Yeah.
You either have an option of keeping it or returning it, right?
Right.
And you want to keep it.
No, you end up selling it like outside.
Oh,
the
so you
dealer.
sell it, go to CarMax or whatever, and then pay off the
loan,
pay off
and
any
then
loans.
You just lease again. That sale, does that need to be accounted?
If it's a lease, is it the lease is it in the business? Then yes,
Okay.
because then you have some transactions that you have to do because it's a business lease. So yes, anytime you buy, sell, trade, you have to document it because in your books you have to get rid of that car and add a new one.
Got it.
So you have to record that transaction. Now, I'm going to take a little break because I know this first part was exhausting, the financial side. The next one shouldn't be as much because it's more like strategizing in terms of how you could keep more of your earned money. And then afterwards is going to be how to be financially successful. That one should be the best because it's how to be a millionaire. And everyone wants to be a millionaire. So any last questions before we take a little break and then we come back?
I have more. This is kind of like a one-off situation, but I heard you say about the gifts and whatnot.
About the what?
The gifts. Like,
Oh, gifts, yeah.
So I do a promo for my team. If they earn a certain amount of production, I do a trip vacation for them. How am I grossing them up for that value of that trip?
See, with teams, I just give them cash because it's harder to justify the vacation of someone and not be taxed, have EDD come back and say that's wages. So they do an audit and it just becomes a nightmare. And then God forbid you send them somewhere and then they get into trouble over there. And then they're going to say, well, you send me over there. Then there's a workers' comp case. And it's just, sometimes you have to start thinking like, okay, do I really want to do this? I'd rather give people money, fake check, here's your check, but it's on your payroll check. I don't give them money. I don't give gift cards. I don't give anything. The only thing I give is like anniversaries when they have 5 years, 10 years, I give them like expensive gifts. And that is even questionable, but I do it anyways.
And do you gross them up for that?
No, that. But if I'm going to pay a trip, I mean, it's not going to be, from here to go get a massage, MV massage. If you're talking about trip, it's probably going to be a couple of $1,000s. I just say, hey, I would love to have you take a break from all that stuff. My next payroll, there's going to be a $3,000, $4,000, $5,000 payment. If you want to ask them to do 0 federal, 0 state, it's up to you. So you could get the check and go have a nice trip. And I pay 3 days of your days off or whatever. But I never personally send them anywhere because my lawyer said no. What if they get into trouble? What if something happens? They're going to blame you and then your workers' comp policy is going to have to pay. So I'm like, nope,
So you
I'm
give
not.
them the cash for them to take the trip?
Yes, and I always put it through payroll. Never write a bonus check.
Just a quick question, well, maybe not a quick question, but I was wondering if you can elaborate a little bit about more on the mindset or psychology, since you work with a lot of Latinos. Do you see a pattern kind of regularly of maybe a little bit of distrust or, I don't know, something that you've observed that might be holding Latinos back a little bit with being transparent or just some kind of a...
Holds them back in terms of business growth?
Yes.
So what has held some of our clients back? Many times is being afraid, like they don't have the confidence and they're afraid to ask questions and hire the right people. And they hire cheap people, bueno, bonito y barato, and that mentality messes Hispanics up. And they're thinking like for example, I had a guy come, I was charging him like, $1,000 something for a tax return. Oh no, I get it done for $400. I'm like, good, go. See, that mentality is like, I don't even want a client like that because then they're gonna wanna question everything. It's like they don't see value. The Hispanics for the most part. So why did I focus on Hispanics? Is because I saw there was such need. And I'm gonna be honest with you, I hate going to good restaurants and having the people in the back be the Hispanics that are cooking and going to good restaurants and good hotels, and then the Hispanics are the ones that are cleaning, not actually in the lobby. And then I remember my real estate agent, I was looking for a house up in the mountains and I fired her because of this statement. I said, are there any Latinos? Because I didn't see any Latinos. And she says, yeah, there's a lot of Latinos. Really? They're the lawn care providers. I'm like, thank you. We're done. She lost the sale.
I'm available.
Good job, Hector. Yes.
I already bought the house. That was many years back. Actually, buying houses is when I realized the discrimination. Buying homes or buying a fancy car, it is tough. They ignore you. You walk in, oh man, I have horror stories when you buy. They're like, what is this Mexican going to be able to buy this house? I mean, it's pretty sad. I felt the racism when I'm buying expensive stuff. It's just crazy. Before that, it never really bothered me, but when it's that obvious, man, it bothers you. So real estate, I have a special thing with real estate agents. So going back to helping answering your question with the mindset is, and I'm going to tell you from my personal story. My parents were poor. My grandparents were poor. My great-grandparents were poor. I had to keep the tradition of poorness. In my mind, I was not meant for more than just to be an employee. In my mind, I was voted in high school the least likely to succeed because I was a class clown, which helped me as an accountant actually relate better to my clients. I'm not this boring accountant that just talks number and bores everyone to death. I hope not. So the mindset, to get out of that mindset, took a lot of personal development, took a lot of books, a lot of seminars. I read a lot to start understanding have confidence, to be able to ask questions, to be able to be in front of people and not really be afraid to communicate or to ask for help. And I realized that if you buy cheap help, you get crap in, crap out. And I was good. I was a great accountant, but I was charging like I was a crappy accountant. So I didn't believe that I had it in me to be successful. Because why am I going to break my family's tradition? Like, no, keep it, be broke. So the mindset of getting out of that mentality took years for me to believe that I deserved it. And then I hired great people. I hired great advisors. I asked a lot of questions. I always act dumb to get people to give me more information. I always, and that's hard for a Leo. I'm a Leo. And that's tough. We're attention whores. I mean, Leos are just, they're just tough. Their egos are way up here. Ladies, don't ever date Leos. Their egos are way up here. They're always the life of the party, but they don't like to say, I don't know. Like, we know everything, and we don't. So I had to humble myself and say, I don't know. And whenever I meet, I don't know. Can you show me? And it works. So the attitude comes with confidence as well. I had to learn to have confidence. Even though I was a confident person, I wasn't that confident in business. So I had to be confident. Talking public, that's tough. Being up here and walking around and looking at you, and that took years for me to do this. And not just be in the corner talking. So that created confidence. And guess what? Because of this confidence, maybe one of you saying, he is a Leo. I would never want to work with him. But one of you guys says, this guy seems like he knows what he's talking about. I'm going to hire him. So that confidence attracts business. And that confidence attracts money. And when someone sells with confidence and money rolls in. But when you come todo arregladito, bañadito, Hugo Boss suits and Gucci and Fucci and all that stuff, and you're broke, you project it. And then guess what happens? No one hires you. You're like, why? I'm so good, because you're projecting you're needy. Even though you're not, people notice it. People notice it. So the mindset is what you have to work on first. Not working in your business, because de qué te sirve all that if you don't have the confidence to be successful? You have to realize you earn it and you deserve it. And most Hispanics don't have that attitude. They feel that they don't deserve it. Like, people are helping, it's like, oh, me está haciendo favor. No, I'm doing you a favor. When you have an attitude like me, I have an intake department that's whole purpose is to screen people to see who we're going to take and who we're not going to take as a client. That's balls. Everyone was like, I want everyone. I don't want everyone. I'm selective with my clients. Just like they were selected to have you guys here because you guys are the best of the best. You have to not be begging people to help you, and that's what I used to do. That's why most of the work that I do is actually free. I do these free presentations. I don't usually do them this long or do all this free consultations on top of that, but for the same reason that, I want to get exposure. George Lopez, not the George Lopez, this other George Lopez, this camera guy. I mean, he's Hispanic, so my thing is, hey, come on, let's go together, let's be successful. And this guy is good, so if you guys ever need videos, photography, if you guys need the reels and all that stuff, George's the man. He's great at what he does. That's why Carla only brings the best. And that's why I'm not your typical accountant. I know a little bit of, remember, I was going to be a lawyer, I was going to be a priest. Confiésense conmigo. I know about money, I know about taxes. So yeah, I'm well versed in a lot of areas.
I love your approach and attitude. You feel very confident out there, man. That's awesome. Because you know your subject. So.
And I work hard for that.
Yeah.
But the mindset is different now.
Yeah.
Yeah.
Well,
thank you.
Questions. Yeah, you're welcome. We do a lot of, we try to bring value to our team, and not only our team, but our association. And you said you do presentations. I'd love to connect with you and maybe bring you out to our association and do a training there. I'm sure you'll meet a lot of people that lack a good.
Absolutely. That's what I've done for 28 years is presentations. Yeah. Honestly, how I really work is with the Hispanic communities. I've gone with a handful of people, with thousands of people, and to educate them. Why? Because I want my people to get better. I want, like what my dad said is, if you are not better than me, I failed you as a dad. Now I have 3 kids. Guess what I tell my kids? If you're not better than me, I failed you as a father. And ever since they were 8, they filed their first tax returns. They have their retirement accounts. They pick their own stocks ever since they were 8 years old. So they have right now more money than I ever had at 30 years old, and they're like 12. And the twins are 19. They just turned 19. But they talk to a financial advisor. They pick their stocks. They look at we went to Starbucks, had a date to look at their portfolio. Here's how your $150, $200, $300 a month is doing. Here's the gains. Here's the stocks you have. And they pick their stocks. Tell me what you like. Oh, I like this. I like Amazon. I like Starbucks. I like this. Wendy's. My kids used to Wendy's. And then we're into a Nintendo. They bought Nintendo stock. I let them make mistakes. But you know what? Sometimes those mistakes made more money than the stocks I picked. I was like, whoa. Like, I have like 6 stocks, and they're all horrible.
I have a question for
Yeah.
you. As far as I know this is good information, but you hear it once and it goes away in a few months because you got in your business again. Do you record like YouTube videos or anything like that? That's another proposition right there.
See that guy right there? See that guy right there? That's my new man right there.
There you go. So we look forward to
You know what? I have been so busy working in my business that I neglected that part to monetize that. But we're working on that. I actually hired her. I did actually. I hired her, and I hired George. George starts in May. He's going to take over and run with it. And our goal is for 2026 to do. Why? Because I found that there's not a lot of good Hispanics that deal both English and Spanish with our community. And why do I keep saying Hispanic community? Because of my father. I see all of you in my dad. I'm like, I don't ever want anything to happen to my clients. That's why I'm so popular with the Hispanic community, and they refer me everywhere because of that. Because my mentality of protecting my clients. And that comes from my dad. To be honest with you, my mom, I mean, they didn't even graduate from 3rd grade. They barely know how to write. They barely know how to read. They still don't know English. So I was like very protective of them, and I still am. And I think that's why I continue to give to our Hispanic community, and many times for free, only because I want to make sure that you guys are better. And that way, if you guys are better, then at least I contributed to a Hispanic to be more successful. Let's take a little break, because, man, if you guys are not already bombarded with all these numbers.